Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Brock Shimano. Today is February 4th. We had a bit of a mixed trade here in Chicago. Let's turn over to the Firetip trading platform, see where we closed off the day. Corn traded down 2 cents, beans up 14 cents. Wheat in Chicago trading down 2 1/4, and Kansas City wheat trading off 5 cents. Now, one of the interesting things today, we did get some export sales. About 116,000 metric tons of soybean was sold to China. We had half of that in the old crop, half of that in the new crop. We also had some wheat sold to Egypt, which is a great news. You know, we're really trying to be more competitive here, get some sales for U.S. wheat, and it's great to see the largest buyer of wheat purchase some U.S. grain. So 60,000 metric tons there. Now, beans was the big story here. We traded up 14 cents. We are actually trading higher by mid-session, but we traded off a little bit from those highs. Brock, maybe you could break down why were we rallying here in soybeans this morning?
You know, I think it continues to be the weather story shaping up in South America, Cody. You know, we anticipated some weather or some precipitation coming into the weekend. We didn't really see anything materialize that was very significant at all for northern Argentina and southern Brazil. And then if you take a look at the forecast over the next several days, you can see that we continue to be dry for northern Argentina and southern Brazil all the way out until Friday. And we've seen temperatures actually move up into the triple digits in some areas. So it's going to be a little bit of a concern as we move forward here. I think they'll continue to keep a bid under this market for the time being.
Yeah, and we did see Solaris and also some other forecasts down there being revised lower for Brazil for soybean production. So that's, you know, another concern that kind of goes right along with your weather concerns here. Now, considering where we are, do you think that we could break above that $15 resistance level, or do you think it's a temporary top for the week or so?
You know, Cody, that is a level we're going to have to pay attention to, is that $15 level. We went up and tested it today. We hit $14.98 was the high. We didn't break above it, so that was kind of surprising to see. You know, I think we're going to have to treat this as a near-term top right now if we don't get confirmation and stay above that $15 level in, you know, intraday trade. So I think that if we do end up pulling back a little, we could go down as far as 1450, which is where the 200-day moving average is. So I would anticipate us being within that range of $14.50 to $15 if we don't get confirmation above that $15 level.
Yeah, that sounds fair enough. I guess kind of trade it like it's that $15 may be the top side of that $14.98, may be the top side of the range. And if we are able to punch through that, then maybe we're ready for another leg higher. But other than that, you know, I think we've kind of hit the top side of the range, and we may back off a bit before we retest that 15. Now, you know, weather obviously important in the bean complex, but it's also important in the wheat complex. It seems as though we're getting a much-needed drink here for the HRW hard red winter wheat growing regions throughout the U.S. And so that is good to see. We should be getting some meaningful precipitation across the plains by this weekend, and particularly in the eastern part of the growing regions there. So we also had export inspections this week. Brock, you know, we had some interesting numbers kind of deviating a little bit from the trend. Maybe you could break it down for us. You
know, wheat and corn actually missed export inspection, what the analysts were estimating coming into the reports. But soybeans actually exceeded the export inspections once again. If you take a look at these charts here, we've been following this marketing year. The green line is what we should be seeing for weekly exports to meet the current USDA projections. You can see here the soybean, we did once again beat the estimates that we need to meet the current USDA projections. But a little bit different story that we know. You know, for the corn market, we continue to fall short of expectations to meet the USDA projections. So this story continues to be, you know, the same story we've seen all year long. Good exports for soybeans and pretty poor exports for corn.
Yeah, bad exports, but also really slow movement of those poor exports. So the bottom line here is that it looks like corn really disappointed once again. You know, maybe this isn't even attractive to pull some of that old crop corn out of farmers' bins. You know, these prices, even after this rally, after the January report, isn't enough. But that pretty much wraps up this GrainTV. Thanks a lot for tuning in. If you have any questions about what we talked about, give us a call at 877-472-4607, or you can reach us at support@grainhedge.com. Thanks a lot for tuning in. We'll see you tomorrow.